who is our customer type. And it really it ranges, Most of our folks are kind of just like mid-level. We don't have anyone that really can't afford, or has a lot of financial struggles because they won't get approved for any loan anyways, unfortunately. So we're kind of like right in the middle, to be quite honest. But then there's the other side of it too, where you kind of heard me mention like the financial, like personal trainer. And like, that's the people that I like to, help. I think they get the most out of it. It's like if you hire a personal trainer, right, you end up like walking away with not only with the feel good of like the exercise, but you probably learn something. Mm-hmm. You probably learn something as to why you're doing this exercise, or, why we're doing this a certain way, or anything like that. So you come away with the knowledge too. So those are kind of the people I like the best. Like those are my favorites because they walk away being able to like turn around to like a friend or family member and go, hey, guess what I figured out today? Mm-hmm. And that's always cool.
Yeah. Welcome to the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We're sitting down with real estate pros, insurance nerds, mortgage masterminds, and local legends who are making moves on the Space Coast. Hosted by the best insurance crew in the 321. At Studio 321, it's all about community, real connections, and sharing a few laughs along the way. Strap in. Let's launch into today's episode.
Today we're joined by Jason Taormina, Senior Director of Mortgage and Insurance at AutoPay Plus. Jason has spent nearly a decade in the mortgage and financial service industry, helping homeowners better understand how their mortgage really works. His focus on mortgage acceleration and payment structure strategies that can potentially remove years of payments, reduce long-term interest costs without refinancing. That's pretty interesting. Nice. Jason is also very active in the Space Coast real estate community, having served as the 2025 Business Partner Co-Chair for the Space Coast Association of Realtors. Jason, welcome to the Studio 321.
Thanks, guys.
What's up?
How's it going?
How are you, man?
Good.
Finally got you in here.
I know. Totally my fault.
Usually is.
Hard guy to pin down, man.
Yeah. So work keeps me busy.
Yeah.
Between, like you said, the mortgage stuff that we do at AutoPay Plus, and then we also just launched a small insurance agency inside of our existing member network. So I head up both those verticals. So,
Gotcha.
It keeps me busy between the two.
Yeah, absolutely.
And they're both kind of like in a pilot phase. Mm-hmm. So we're still kind of getting our footing on both. Mortgage longer than insurance. Insurance only launched probably in Q3 of last year.
Yeah, okay.
And then mortgage is a little bit longer than that, but still, they're still in
welcome
their
to the
kind of
business,
infancy.
man.
Thanks. Yeah. It's been interesting.
Yeah,
it definitely has. Yeah.
Absolutely. It's the insurance industry, man. It's different. It's a different beast than people really think.
It is. And, for us, the position that we're in, our goal is to always add value financially to our members. Yeah. And, for us, we call them members versus just like clients, because we like to really, think of like BJ's, Costco, things like that, things that you're like a member of. Because we really want you to look to us first for anything that comes to financial. So it's not that we're setting out to be like the best insurance industry out there, or ever going to self-insure or do anything, like that. But anything that can add value to our members, we're going to explore that as an option.
Yeah,
that's pretty awesome.
It's awesome. Love it. So before we dive too deep into everything, tell us a little bit about your background, man. How did you go from medical industry to mortgage in the financial world?
What did you do in the medical industry?
Yeah. So I went back to school when I was, I guess, in my late 20s. Got certified as a PTA, which is a physical therapist assistant, and went to work for a small, I knew I wanted to do orthopedics. I knew I wanted to do, like, coming from a sports background, wrestling, I knew I wanted to do something in like sports orthopedics versus like inpatient care, things like that. Yeah. So hooked up with a company called Ability Rehab out of Orlando. Picked up two great mentors there. One was John Garina. The other one was Paul Lopes, just fantastic people. And I worked for a while in the Waterford Lakes area while I lived in Orlando. So I worked on like the east side of Orlando, lived out there too in an area called Avalon Park. I was with Ability for a couple years. And they decided to expand out into the west a little bit. I'll say west, but like west of like downtown into like the Claremont, Winter Garden kind of area. we had a partnership with Jewett Orthopedic. So Jewett is like the ones that do ortho for like the Magic, the Solar Bears,
very nice.
Orlando City Soccer, things like that.
Okay.
They were opening up a brand new facility out in the Windermere area. They needed someone to be the clinical director. So I got tapped for that. So it created a commute for me from the east side of Orlando to, the west side of Orlando.
Right.
But it was great. Great opportunity. Got to meet some fantastic docs who I'm still friends with today. Ended up meeting my current CEO. But that's actually not how I got into what I'm doing. There was like a lily pad in between. And so I was at that clinic. I built that from a startup clinic to what it was when I left. So that was about 3 years, give or take. Really, really great clinic, all sports focused. Absolutely loved it. And then right around the time, like right before COVID hit, I was already kind of feeling a little burnout maybe and maybe wanting to do something a little more, a little different. Well, a good friend of mine who I actually ride Harleys with for many years, vacation with the guy, things like that. He's in our group. He had been in mortgages for many, many years. Yeah. And he had always wanted me to come work for him, to which my answer was, I know nothing about mortgages.
Right.
Why would I come work for you? I work in physical therapy. And he insisted that it was something that I would be good at. And so after him pressing on me for years and years and years,
That's so crazy.
I finally decided just to make a switch. So became a loan officer for Homebridge, which used to be Remen back in the day, I guess. And then Homebridge then got acquired by CMG Home Loans. So then I worked for CMG Home Loans. Well, in the midst of all this, one of the docs that I mentioned that I stayed friends with from Jewett, we would go over to his house. He was a big Bengals fan. I'm a big Steelers fan being from PA, right? So we would all go watch like football together and other folks would come over, things like that. Well, one of them was my current CEO. So he was a Dolphins fan, which is even more dismal. And so we would always hang out and watch football together. And well, we started like talking shop one day and basically says, well, what are you doing these days? Because he knew me from being in the clinic. I kind of tell him I'm just writing and originating loans. And he goes in to tell me what he does, which is AutoPay Plus. And he's like, well, there's got to be a way we can work together. And I was like, I mean, I'm sure there is. I was like, at the time, AutoPay Plus has been around for 20 years, but they've always been rooted in the automotive industry. And in AutoPay Plus doesn't stand for automotive. It stands for automatic or automated. And a lot of people think that it stands for automotive, which it doesn't. So really any trade lines that you have, they'll accelerate for you, whether it's an auto, a mortgage, a student loan, medical debt, credit card debt, anything like that. Like I said, the whole goal is to structure people so they can get out of financial debt, become more responsible, become more independent. So we start talking about all like the synergies that we could possibly have. And long story short, I read up a business plan for how we can make a move more aggressively into like the mortgage and real estate space, in addition to what we're doing on the automotive side. And here I am.
Wow.
Awesome,
Yeah.
That's impressive.
Is that a pretty good
absolutely
3-minute elevator speech?
But that's what I want to kind of dig into. Like, what like sets you aside? Like, what do you do with to your members opposed to what a normal brokerage can do?
Yeah. So first and foremost, we don't originate loans.
Okay.
We actually partner with loan officers.
Yeah, so you guys are like an added value to the loan officers in the community.
We are. We are. If we're talking about what we do for our loan officers, essentially we shorten the life cycle. So for our loan officers or even like our real estate agent partners, we're shortening the life cycle because the faster a consumer can build equity in their home, the faster they can do more with that. So, if they're building equity faster, they can do the kitchen remodel faster. They can do a pool install faster. They can maybe even go buy a second home over on the West Coast or start their first investment portfolio with like an Airbnb. So we allow them to build equity faster. So from a business standpoint, our mortgage and real estate partners see that as added value because it shortens the life cycle. So for you, Angela, we have a transaction this year. I may not see you again for 4, 5, 6 years. What if I could see you in 2 or 3 instead? And then same thing, just reversed on the the consumer side. If you know that you want to put in that pool, remodel the kitchen, things like that, how do you build that equity faster so that can maybe become a cash out refi or a HELOC, something where it's usable and tangible faster?
Yeah.
Very nice.
So how are you connecting though with the mortgage holder? You know what I mean? Like Where's that transition happen? Between like the origination of the loan and then where does AutoPay Plus actually connect?
So we come in after the fact.
Okay.
We can connect with anyone like the day they close, or it can be, weeks later, months later, things like that. One thing that we see often happen is, when you're first buying a house, it's like anything, right? It's like if you're first buying a car, you get the new car smell, you're super excited. Like reality hasn't hit yet,
right?
That you just took on this massive financial obligation, right? Yeah. And especially for folks that are at the higher end of like their DTI bracket, they don't realize sometimes that, hey, life is good until it's not. Emergencies come up, accidents happen, medical bills happen, all the things that are kind of unforeseen. And that's when like the pain starts to happen. That's when people have to like start like strategizing a little bit differently. So with us, what makes us kind of unique is a lot of companies out there will offer to split your mortgage in half. What makes us unique is that we do it to your pay schedule. So as soon as you're getting paid, we're matching your monthly obligations to your pay schedule, not when the bank wants to take the money.
Gotcha.
And then along with that too, a lot of times when
So it's like a payroll deduction?
Yeah.
Okay.
And so a lot of times when, banks will do that too, if they're offering to split up payments for you, they're only doing it 24 times a year, which if you follow a true biweekly cycle is 26 times a year, which naturally creates one principal payment per year. Yep. So really it allows someone to make an extra payment to whatever that trade line is without really changing their pay cycle in their mind. They just know every time I get paid, half my mortgage is coming out or half my auto. So they just follow that cadence, and that just becomes now their new budgeting norm.
Gotcha.
Wow.
Yeah, so it's like the money's not there; it's not going into their account and then they're making a payment. It's coming straight out of their paycheck.
Yep.
Correct.
Yep.
So from a budgeting standpoint,
it's coming out of their account, and then we're escrowing it. We're holding it.
Well, I'm saying but it's coming out of their paycheck, right? Not like out of their bank account.
Comes out of their bank account.
Yeah. Oh, okay.
It does come out of their bank account.
Okay. So it's on the same day or
Correct.
scheduled. I got you.
Yeah. So for people that maybe aren't financially responsible, right? We're taking it before they can spend it.
Yeah. Well, that's what I was getting at. That's what I was trying to get at is like how because I could see from a budgeting standpoint that helping people.
Yeah, and it's as close as we can get to doing that, because we would have to partner with every major payroll company across the United States, because we're in all 50 states. Yep. So we would have to partner with every major payroll company, to make that work. But that is the idea. It's the same thing. Like think like financial personal training, right? It's the person that drags you out of bed to go to the gym when you don't want to. Yeah. It's that, hey, I'm going to take this money from you before you go spend it on Black Friday deals.
Yeah. So the principle behind AutoPay Plus is at the end of the year, you're going to make one extra payment, right?
You can certainly do more, but that's just kind of organically. Yeah. So with 26, that's what happens.
So it sounds to me like you guys are like almost like a consumer, almost like educational company too, right? Because you're trying to educate them on budgeting and finances and stuff like that, I would imagine, as part of the bigger scheme of things.
Yep.
So what are some other things that you guys do to help people as well?
And that's kind of how like insurance, brought its way into the fold, right? So if let's say we take someone's premium, right? Like what we just did with my house, right? Now what do you do with that savings? And so now what we do, if we just saved you X amount of dollars, let's say it's either total premium or per month, what we'll do is we'll basically send out like a new kind of analysis to say, hey, you just saved $100 per month on your auto insurance. I'm sure you want to keep some of that in your pocket for savings or other things. But let me show you what happens even if you take 25 or 50 of that 100 and apply it to this car loan. And now you're going to pay it down like even faster. So originally you were already set to pay the loan off, 6 to 8 months sooner. Now we turn 6 to 8 into 10 to 12. So again, just reallocating those savings. And it is. It totally is. Yeah. So, but that's what we do. We try and keep them focused on improving themselves financially, and not just taking that $100 and saying, okay, cool, now I have $100 more of like spending money every month.
Yeah.
And then you give them like, the perspective of like, how long this is all going to take, too. So, I mean, that's pretty hopeful, right?
Yeah.
Yeah. They like, because I know after you buy a house and stuff like that, it takes a little bit for you to get like, obviously if it's the top of your budget to get equity into a home, but like that's, something that's encouraging to, do that short-term discipline and then, see a, bigger picture.
And that's one thing that, we'll hear people a lot, we'll say, hey, just a normal biweekly pay cycle will shorten your loan 6 to 8 years, right? So you're taking a 30-year loan and you're making it more like 22 or 24. But, and then, the common response is, well, I'm not going to be in this house for 24 years,
Right.
which most people aren't.
Right. Well,
But then, you even look at like 4 years out or 6 years out, right? So like freshman to senior year in high school, right? When you become empty nesters, things like that. Even then, on a typical home loan in today's market, you're going to be about $10,000 plus ahead in equity just in those 4 years.
okay.
Yeah.
So even in just 4 short years, you're going to have, a nice little acceleration from where you normally have been on a standard repayment cycle, even if you're not staying in that home for the 20 or 22 years.
Yeah, and it doesn't have to be a 30-year, right? It could be a 20-year mortgage, 15-year mortgage, or whatever.
Well, like I said,
You can
we got
accelerate
started in
on that.
automotive, and automotive loans are, 4,
absolutely.
5, 6. Well, now the normal auto loan, I don't know if you guys know this, but the normal auto loan right now, I think the average is 82 months for an auto loan.
Oh, I know. I
That's
saw
the
that. That's
industry average right
crazy.
now.
On the auto side, are you guys
That's
like, is there almost
that.
like banks that are saying to buyers, hey, we'll do it, but as long as you have AutoPay Plus attached to it somehow? Is there any kind of like, you know what I mean?
I know exactly what you mean. And the answer is no. Think about it from like a financial perspective, right? That's how their name is on the skyscraper or on the stadium or on the whatever. They make their money off of our interest. It's nothing. That's nothing new. It's nothing surprising. They don't really want companies like us to exist.
Oh, I
they
got you.
actually make it challenging for us. We have an entire.
I was thinking like along the lines of, maybe if you got somebody with bad credit or something, it was a way for the
For a
bank to
safety
feel,
net.
yeah, correct.
to
feel more comfortable with it.
Like avoid like things like first payment default. Or things
Correct.
you would think so.
Yeah.
And we've explored that too. And those kind of like partnerships and integrations saying, hey, listen, we can make sure that Steve doesn't default on his first mortgage payment before he ever gets started.
Yeah.
And it's not financially advantageous to them.
Yeah, I gotcha.
So yeah.
I would think
they'd rather take their chances.
Yeah, I would think on the mortgage side though, that they love it. I mean, even though you are paying it down a little bit faster, but like in today's world, people are putting 5% down.
Yeah.
100, sometimes 100% financing. You would think that the lenders would go, hey, let's get us in a better equitable position on this thing.
Yeah.
You know what I mean?
And that actually, it's funny you say that because that actually became very popular a couple years after COVID, like around like 22, 23 on the automotive side, because when everything, you remember like the price of cars like during COVID, right? They were crazy. So now you have all these cars out in the world that have this massive negative equity. But when they bring that back to the dealer, that dealer has to try and do something with that and try and make a deal. And they're so far upside down in that vehicle that like, they can't even move the money anywhere because it's just that bad. So it's kind of to your point, the automotive dealers were saying, you almost have to use AutoPay Plus on every deal now just to get us out of this wave of negative equity. Now, this is the only way that we're, that was their path ahead to say, all right, well, these cars, we don't want them coming back in 24, 36 months with all this negative equity. We have to do something now to slow the bleeding.
Yeah. Yeah. I mean, I could see you guys being, a good partner for some of that for sure. It just depends on, like you said, man, the bank's got to think a little differently about it probably.
They do.
They
do. And that, and that's, it's funny when you mentioned education before, that's just something people don't realize. They don't realize that if you buy a $300,000 home at 6%, that your total cost of ownership is $600,000.
Yeah.
They don't realize that it basically costs,
Yeah, if you keep it the whole time, you're
Yeah, and
absolutely.
people don't realize that, like what they're really paying for, for an asset, whether it's a car, whether it's a home, things like that. When you look at like that total cost of ownership based on the interest, I mean,
yeah, no, absolutely. So is the program? I see, you had kind of mentioned in some guest prep stuff that it's not a borrower fit all thing. Each borrower is a little bit different. So what are some of the different ways to structure it? Is there other ways rather than just like one payment a year or something like that?
Yeah. So, naturally, just because of the 12 months versus 52 weeks in the year, right? If you get paid biweekly or weekly, you just organically create that extra 13th payment. If you are someone like our military folks who often get paid one time a month, then it's more of a coaching and convenience kind of thing.
Gotcha.
Whereas they're like, hey, listen, I still want to pay this asset down faster, but I only get paid 12 times a year. So what we then do is we basically chop that up and say, okay, if you wanted to make one extra payment, maybe they'll say two, we then will divide that up across their pay structure and make sure that that automatically happens as well.
Yeah, so their monthly payment just becomes a little bit more so that that 13th payment is there.
Correct. Yeah, because some people, they just don't get paid that way.
Yeah,
they either get paid semi-monthly, which is only 24 times a year. Or like a lot of people don't even realize that semi-monthly and biweekly are two different things.
Yeah.
Like they'll say, I get paid.
We know.
Yeah.
We know.
So a lot of people don't realize that.
We're 24 pay a year here.
Yeah. So those people that get paid either semi-monthly or monthly, they wouldn't have it naturally built in to their pay cycle. But I mean, I think last time I checked, I think it was like 84% of the nation is paid on either weekly or a true biweekly schedule. So most consumers out there, they fit into this box,
Yeah, got it. Cool.
Well, you said you did insurance, but did you have to get a license for that? Yeah, so you do have it. What license do you have?
I was 220.
You have a 220.
So I'm the principal.
Jack of all trades.
I guess so. Yeah, I guess so. I do whatever my CEO tells me to do.
Did you pass it the first time?
I did.
Yay.
Yeah.
So on the insurance side, so you guys writing in Florida alone? Like, are you writing in multiple states, just Florida? What are you doing?
So we piloted this program last year with just a small handful of carriers. It was kind of hard to get started, really. Just like a scratch
extremely
agency.
difficult. Yeah, extremely difficult.
Yeah. So really, we had to leverage our book of business on the biweekly side to say, hey guys, listen, this is our potential. This is what we do. Monthly. This is like our audience here. That was really our only way of getting anyone's attention at the big national carriers. And so we piloted in Florida. We actually built a member journey inside of our website at autopayplus.com, plug. And basically members go through there end to end, and it's pretty seamless. We integrated a couple other things with TransUnion, and there's other companies out there that will do data scraping to make the journey easier. And what I mean by that is instead of you having to punch in your VIN or your make, model of vehicle or things like that, it will scrape off your existing declaration page with those existing integrations that we created. So we built that all out and then piloted that program in Florida. Once we worked out, most of the bugs and got it to where we were happy, we moved on to a second iteration of it. We've now moved out into Texas and Pennsylvania, and then we'll be moving out to more East Coast states throughout the year.
Very cool, man.
Yeah.
Well, good luck on growing that, dude. I know it's a grind.
Yeah.
Insurance is a slow burn.
Yeah. It's interesting. It's very satisfying to be able just to have another avenue to help our members and save them money. Because that just always feels good. Right. But then you see other sides of it too. Where someone will, default on a payment and they'll get their policy canceled, things like that. I had to go and call the carrier the other day and try and advocate for this person, because their answer, obviously when that happens, they get a rate increase, and so I got really upset. I was like, so your answer to this person who defaulted on their payment is to raise their payment, right? $243. I was like, let me know how that makes sense. I was like, get back to me on that one. And, that kind of stuff upsets you, right? Because a major national carrier, do they really need, little Miss Molly's $243? Not really.
Yeah.
So that stuff's upsetting.
I mean, it's really hard, especially when, you have to represent, the carrier just as much as your member.
You do.
It's really hard. And, I do find myself in bits of arguments with them, going back and forth, make this make sense.
Yeah.
And
I will say though, as we've grown and gotten bigger, don't get me wrong, we got some really good carrier partners, but we're definitely not beholden to them anymore. You know what I mean?
Yeah.
We're big enough now to where we can really take care of the customer.
I love that.
You know what I mean?
I love that.
And so
yeah, we definitely have some leverage.
Yeah, we have leverage, and don't get me wrong, I love my carrier partners. Don't go dropping me, but no, but in all seriousness though, we do so much volume. You know what I mean? If we have to, we can move it around. We can do a bunch of different things. We're just not beholden to one carrier. And
that's one thing I've noticed too from when we started. Right, it was a lot of begging and pleading, for us, like to be like, hey, please, like, give us a chance, And now,
crazy, yeah.
I just had a very different conversation with one of our other carrier partners who isn't doing so well with our member demographic right now.
Oh.
And, no heat towards us, but, she called me and she was like, hey, like, I see you guys doing massive volumes of quoting. She goes, what's going on? And I was like, you guys aren't competitive.
Right.
And so, that conversation again has just turned a full like 180. It went from being like, oh my God, please give us an appointment to, sorry, bro. Like, you guys got to do something on, if you guys want more business, you have to be competitive. So like now I'm sending them kind of like analysis of,
wow, you have time for that?
Like, ChatGPT. Let me download this report. You make this make sense and turn it into an email.
Yeah, okay, I was going to say.
And, so that conversation has just totally changed where now we're starting to get some leverage ourselves to where we can say, hey, listen, like, it's not that we don't love you guys. And unfortunately too, it was one of the first carriers that ever like, threw their hat in the ring to like really play with us. And like, so I felt bad because they're one of the ones who helped us like really get started.
Right.
It can be really, the barrier entry nowadays into insurance is getting tougher because of the carrier access.
Yeah.
Because the carriers are like, oh, you're too small, we won't do business with you, or you don't have enough, experience or whatever it is, right? It's almost like, I don't know, man, you really got to like grind it out in the beginning to prove that you can do this because like you don't have the product to sell because you don't got the carriers.
Right.
And then the carriers are going, you don't write any business. And you're like, I don't write any business because I ain't got no carriers.
So I made the joke. I grew up in the restaurant industry and I bartended like through college or anything like that. And I made the same joke because it was like the bartending thing. You apply for a bartending job and they're like, sorry, you don't have any experience. I'm like, well, no shit. How am I supposed to get experience if no one will hire me? Yeah. So, but it's the same exact thing. It's that, chicken and the egg.
Yeah, exactly.
But it's like that, getting out of college in any career. Like, it's just like, no one wants to, give you that chance.
Yeah.
But it's been good though. I'm really, really excited to see, what we're going to do in some of the other states and then start to see like, we're a very data-driven company. Like we're nerds. We love the data. We love to look at like all the trends and the ebbs and the flows and everything like that, and look at what correlations we can find with things like that. Again, total nerds. Yeah. And so we love it. So it's going to be really nice to see too, like what we see now in like Florida and Texas as we move out into like some of those more like northeastern states and see it as
Yeah, Texas is a tricky market right now.
Texas is,
I would say, Texas, there's a lot of growth opportunity there. That's a hard market right now. So
they're very protective of their customers when it comes to finance. Like even when I was at CMG, we had a proprietary product that only CMG Home Loans had. And we had a version for 49 states and then had a Texas version of the product. And basically, long story short, without getting into it, was Texas requires all loans to have, it can never have a balloon feature on any loans in Texas. You can't have a balloon loan in Texas of any kind. It has to, at the end of that loan term, be fully amortized. So basically, you can't get to like month 24 and they make the remainder of the loan due at month 24. Oh, gotcha. Even if month 1 through 24 didn't add up to paying off the loan, they can't make that loan due at month 24. Texas law says that all loans have to be fully amortized, even if it's like not necessarily like linear. If it's more like, okay, you do what you want, but then like the last portion of it has to be amortized. But my point in saying that is that Texas is they're very protective of their residents when it comes to financial doings.
That's nice.
Yeah, I just know in the insurance industry, Texas is, going. It's a pretty tough market right now. They had the same issues as Florida had with the hail and all that. And, Louisiana is another state, like really tough market. Colorado, tough market. California, Florida, we were probably the toughest market 2 years ago, like where it was like the rest of the country was cranking and no issues. Yeah. And then Florida was coming out of their crisis while the rest of the country was kind of getting into a really hard market. Yeah. And so like Florida has led that charge out of the hard market. And, like other states are now looking to Florida going, man, look what they did legislative wise. Like we need to pay attention.
And see, and you guys even have more, optics on that than even we do because we don't even write home. So, we've all worked together on the mortgage side when I was still writing mortgages, But yeah, like we're not really, plugged into what goes on the home side other than
Gotcha.
because we don't right now. It's just not part of our strategy at the moment.
Yeah.
Okay, so yours
it
is
makes-
just what, auto?
Yeah.
Oh,
Yeah.
Yeah.
that's good to know.
Yeah, no, I didn't. I mean, I thought it was. I didn't realize that. I thought it was.
Yeah, that's
both,
why you're
but-
here. We're trying to figure you out. We were like, what does
luck.
he do?
Good luck.
Yeah. Well, I kind of want to pivot a
No,
little
I
bit
mean that's
away.
why I'm glad you're here, man. Because I do think there's a
Yeah.
lot of people that, are just not 100% sure.
Yeah.
What it is AutoPay Plus is and what it can do to help.
Mm-hmm.
you
It's
know?
kind of funny. You asked earlier about like who is our customer type, and it really it ranges. Most of our folks are kind of just like mid-level. Like we don't have anyone that really can't afford, or has a lot of financial struggles because they won't get approved for any loan anyways, unfortunately. That's more folks that, are either, going, if we're talking automotive, going to like a buy here, pay here kind of place.
yeah.
We're not, that isn't our market because unfortunately those folks, we need them to have a loan
Right.
to be able to help them to accelerate it. So we're kind of like right in the middle, to be quite honest. And then, it's funny when you hear like Frankie explain our product to what it is. Frankie explains it more to like the upper tier like person. Frankie's like, just give them everything, they'll figure it out, and you don't have to worry about it. They'll make it, not only will they accelerate your payment for you, but they'll structure it the way you want it to be done. And then you just go do you, go spend time with the family and the kids, go on vacation. Basically, it's on autopilot.
Yeah.
And that's how like Frankie explains. So Frankie explains it as much more of like a convenience
Yeah.
factor.
Right.
Whereas
Shout
like,
out to Frankie LaBella.
That's right, Frankie LaBella Baltella. Who's been absent from softball for a couple weeks. But anyways.
He's a new baby.
That doesn't matter. I had surgery on Wednesday. I'm still here. And so, but then there's the other side of it too, where you kind of heard me mention like the financial, like personal trainer. And like, that's the people that I like to, help, because those are the ones that like, I think they get the most out of it. It's like if you hire a personal trainer, right, you end up like walking away with not only with the feel good of like the exercise, but you probably learn something. You probably learn something as to why you're doing this exercise or, why we're doing this a certain way or anything like that. So you come away with the knowledge too. So those are kind of the people I like the best. Like those are my favorites because they walk away being able to like turn around to like a friend or family member and go, hey, guess what I figured out today? And that's always cool.
Yeah.
Yeah.
So let's pivot and talk a little bit about how you market yourself.
Yeah.
For this. Like what is the key for you guys when you guys are coming up with like your marketing strategies and what you're going to do? What's some of the keys to marketing? Like how can the real estate community help you? The mortgage community help you? You know what I mean?
Yeah.
Like,
Yeah. So really we look for really any type of relationship. It can be like smaller, mortgage brokerages all the way up to like enterprise relationships that have, that are in every state. So it could be a small independent local brokerage. It could be, larger like nationwide groups. It really doesn't matter like specifically. So, we have probably just like you guys do, you kind of have like your segmentation of like your minnows, your guppies, your tunas, your whales, things like that. We do too, so we go after like, obviously larger enterprise relationships like take longer, those kind of acquisition cycles are, 6 months to a year because you have to go through compliance and legal and all those kind of things. Whereas more like someone like a little like local, like mom and pop brokerage might say, yeah, we'll start, integrating with you guys tomorrow.
Yeah, got it. And then you've been involved in Space Coast Association of Realtors, right?
Yeah.
Co-chair.
Co-chair, that's right. Yeah, me and old Steve Taggart.
Yeah, you guys were the best. The energy and everything.
You're just saying
How is that? How has that group helped you?
So that group's great. I had a great time. Even before I was co-chair there, I was there that's where you and I met.
Yeah, events, yeah.
Yeah, right? Through like Space Coast, like through
I'm pretty
Diana,
sure that's how we
that's
met. Really, is through
that's-
Space Coast.
Yeah.
Diana doing our
introduced
marketing.
us,
and-
yeah.
because Diana and I, first time, I think Diana was like one of my first friends at the Realtor Association. And then, we threw that one big like end of year party out on like Merritt Island there. And we like, her and I worked together on the task force for that.
Yeah.
But, I always loved it. I always loved being involved with it. It was great. It wasn't, the most convenient thing for me, scheduling wise, because I still had to
Yeah.
get to the office in Orlando and things like
Right.
that.
Gotcha.
So it wasn't the most convenient thing, but I absolutely loved it. Like
Yeah,
the
yeah.
people that are there are typically there for like all the right reasons. Like they want to give back to the community. They
Yeah.
want to support our realtors in the community. They want to also, you know, interact and be surrounded by other people that are leaders in their industry, whether it's mortgage, whether it's insurance, whether it's title, you know, you name it. And so I always like people like that do the extra, that don't just kind of like coast by, you know? So
Yeah.
to me, it was always like a good group of people. And then I just got to the point where after doing like co-chair, Jamie Rood stepped up to be chair
Yeah.
this year. And it was almost like a relief because I was getting so
It's a
busy
lot.
with insurance and, you know, mortgage and heading up these two verticals that I almost had too much on my plate to
Yeah.
begin with.
Yeah.
So
Yeah.
it was almost like a blessing in disguise when Jamie and her team stepped into that chair and co-chair position. But yeah, I absolutely loved the events. I mean, it was a lot of fun.
Yeah. Have you been able to connect with some people there that have helped you grow AutoPay Plus? I mean, has it been worthwhile for you as far as that goes?
I can't say there was like a direct, you know, growth path
Yeah.
there for us. It always just felt like it was a great way to stay plugged in with my peers,
Yeah. I got it.
you know? So I've definitely gotten, you know, some good business relationships out of it
Yeah.
as a whole, but it definitely wasn't like our main driver,
Yeah.
you know,
yeah.
in any stretch, but it was nice to be like plugged in through
Yeah.
there.
No, absolutely. Yeah. I was just trying to dig in a little bit on like, you know, how we or how, you know, anybody listen to this, you know, can help AutoPay Plus in your business and you know what I mean? And like
Yeah.
how to connect you with the right people and kind of, you know, like what you really need to help grow this thing, you know, from a consumer standpoint. Does
Like
that
in
make
a
sense?
conversation setting, what are we listening to? What are we trying to listen to? And what are we like, okay, this could be a good match?
Yeah. Anytime that you have anyone who, again, you identify immediately, and if we're talking like to a lender, right, or a
Yeah.
broker, loan officer, anyone you can identify as getting paid or weekly or biweekly, they're going to benefit from this right off the
Gotcha.
bat.
Okay.
Also to anyone who is in that higher DTI bracket,
Okay.
you know, because they just don't have enough residual income to get over like those ebbs and flows of life.
Yeah.
You know, they have a car breakdown, they have a medical emergency, things like that. Chances are they're going paycheck to paycheck.
Yeah.
And they just don't have it, you know, set aside. It's harder when, you know, you're in like a 46, 48 or higher, you know, debt to income ratio bracket.
Yeah.
That means that 50% of your income is spoken for,
Yeah.
right? And that's before all the other things that we don't even take into account, right? The cell phones, the insurance, you know, gas, groceries, all those things. There's not a lot left on the bone after it's all said and done. So, I would say that anyone who sees, you know, at any point in time, or even a lot of borrowers coming across that are, you know, facing more and more of these like tight qualification scenarios, you know, which I think more and more people are nowadays because the housing market is
getting
growing
harder.
faster than
Yeah.
our income
And it's-
is growing
Yep.
typically. So I think you're seeing more and more people in those higher, you know, debt qualification brackets. And I think that's a great way for loan officers to help serve their clients after the closing table.
Yeah.
You know, it's a great way for them to, you know, look out for them and make sure that, hey, listen, we got you into the house. Now, how do we take care of you after you're in the home?
Right.
It could also somebody, right, that you know, maybe they're thinking about refinancing, and instead of refinancing, it's like, hey, let's, you know, look at this as an option.
Yeah.
Right.
Yeah. So I'll actually do you one better.
Yeah.
I actually just had this conversation the other day with Charlie Gutierrez from Cross Country. And I was asking him how his week was going, basically said he had a bunch of refis, you know, that he had just got done doing. And you heard me mention earlier that if you started near day one on a biweekly strategy, you're going to shave like 6 to 8 years
Yeah.
off your mortgage total, right? Well, when you think about a refi, a lot of people don't know you're resetting the loan clock
Oh yeah.
typically,
Plus
right?
you're
So-
adding closing costs to
Yeah.
yeah. So let's say you've paid 3 years into your 30-year loan. So now you're at year 27 remaining. Well, you refi, unless you refi down to like a 15-year or, you know, a 20-year, something like that, chances are you've reset the loan amount to a 30-year, the loan term to 30-year.
Yeah.
Well, how do you get that time back? you know? So at that point, the conversation we had was, well, you enroll in biweekly. Not only do they get those 3 years back, but then they're basically another positive 3 years or so.
Yeah.
So that's always an interesting conversation that I like to have at the time of refi, because, you know, and we don't have that conversation right now a lot because we're not in a big refi market, you know, and I think that's, you talk to certain people, that's probably coming back here relatively soon. But that's always the conversation I like to have. If someone doesn't want to refi because they don't want to reset that loan clock back to 30, it's like, how do you kind of get the best of both worlds? How do I get the lower monthly payment by refiing at today's market rate? Yeah. But also, how do I avoid just tacking those years back on every single time?
Yeah, you might have somebody looking, you know, for different strategies to, you know, instead of a refi, like if they're at 6.5 interest right now and the rate in the market's, you know, 5.75 or 6, you know what I mean? Like it might not make sense to refi, right? Like it might not make sense to refi that loan until it's 5 or less.
Right.
And so, you know, you got to start looking, going, okay, well, let's do something else, you know, to pay less interest, and that's make an extra payment, right?
Because like you said, you know, the cost of it, the cost of refi, if you're sometimes, you know, a lot of brokerages now like aren't charging that refi, like the admin fee. They're not charging that within like a certain amount of time when you purchase. They're letting you kind of do like a refi rebound kind of thing. But typically you're always going to be on the hook for, you know, for title fees.
Yeah.
You know, and then you have to look at, hey, how long is it going to take us to pay this back to make it actually like worthwhile? You know, like, do we have to stay in this house another 4, 5, 6, 8 years to really see the benefit of lowering the monthly payment $75 a month? Like, does that even make sense?
Yeah. Right. Yeah. So what's Jason Taormina do for fun, man?
Big fitness guy, big foodie. They go hand in hand. They do. So I have to stay working out.
It's a balance.
So yeah, I have to stay working out so I'm not like 1,000 pounds. I love my food.
That's why I'm 1,000 pounds.
Well, we're going to start working out though, right? We're going to come by the house for sure.
What?
I built a home gym.
You built a home gym.
Wow.
And so we're not 100% done, but we're pretty close.
Yeah, we're going to have like bromance gym nights.
I did want to touch on something. I hope you don't mind me asking.
Yeah.
You know, you had a pretty life event that happened to you a while ago, a little bit ago.
Oh, when I stubbed my toe?
You know what I'm talking about. I want to know, like, you know, how did that change you, and how does that make you, like, you know, Jason Taormina today?
Yeah, Taormina 2.0.
Yeah. So yeah, for those of you guys who don't know, I had Hodgkin's lymphoma, and it was interesting. It was a really like just busy time, like in life. I used to wear my beard like a lot like longer, like kind of like yours, and I had which I'm very jealous of that.
Well, you can get it back, dude.
I know.
You're
and
sticking it out there.
Don't do
I
it.
always used to cut it down like this for like triathlon season. And, you know, just making me go fast with the water. And so
that little bit of hair. Okay.
So hey, every bit helps.
Yeah. Okay.
And so I cut my beard back to like this. And I noticed this like lump like on my neck, and I couldn't feel it like through my beard. It was never painful or anything like that. And so I just, you know, I don't think anything of it. And of course, you know, I don't go get it attended to or anything like that. I'm like, it's probably like a swollen lymph node or something, you know, which it was a swollen lymph node, swollen with cancer.
Yes.
And so I finally go get it checked out. I actually went down behind my office in Orlando to a dermatologist because I was hoping that it was just like a cyst or something, right? And they walk in, they take one look at it, and they go, get out. They go, it's not a cyst. They go, we're sending you over down the road to an ear, nose, and throat guy. So he kind of like reaches in and like kind of like starts like palpating things like that. And he goes, I think you have like a blocked salivary gland. I go, oh, okay, cool. That sounds, you know, like a good thing, right? And he goes, I'm going to send you over, get like a biopsy of it, and you know, we'll go from there. So I go to the biopsy. I'm actually driving in to work that day, and I was going in early. I remember because it was the day of our national sales meeting, and I'm driving in. I'm supposed to speak that day at our sales meeting, and my phone rings, and it's like 7:15 in the morning. I pick up the phone, and the doctor, the ENT, he goes, "Hey, Jason, this is Doctor," and I can't remember his name. Saved my life because I remember my oncologist's name, who was Dr. Groh, but I can't remember the referring doc's name. And I immediately go, well, this isn't good. And he goes, no. He goes, it's fine. And I go, you have MAs that do this. I go, why are you calling me at 7 in the morning directly?
Right.
And he goes, listen, he goes, nothing serious. He goes, I just want to call it, you do have cancer. And I go, you and I have two very different definitions. This is serious.
What? Serious?
Jeez.
He goes, listen, he goes, I'm going to be straight with you. He goes, I had this very same cancer 2 years ago. And he goes, and I am fine. And he goes, and you are in way better shape than I am. He goes, you're going to be just fine. He goes, I don't want you stressed out. I don't want you worrying. We're going to get you right in. He goes, we're going to get you taken care of. I go, cool. Doc's not worried. I'm not worried.
Right.
Yeah. So this is actually a pretty funny story. My CEO hates when I tell this story. We go to the national sales meeting. We have that done. We go out that evening, take everyone out to dinner and like that. The very next day, we have clients in town. So we take them out for dinner when we're at not downtown Orlando, Icon Park over there by the Eye and stuff like that. And we take them out for dinner. We get out of the elevator at the parking garage. My CEO starts going his way. I start going mine. He goes, I'll see you at the office in the morning. I go, I'll see you at the office. I have cancer.
Oh, shit.
Jeez.
And he goes, what'd you say? And I go, I said, I'll see you at the office. He goes, the other part. And so I tell him, and I was like, listen, Doc's not worried. Says everything is totally fine. I was like, I'm not going to miss any work. I was like, so, don't worry about that. He goes, because that's what I'm worried about.
Yeah.
And he goes, I'm terribly concerned about you missing work and you not dying. And so, but everything was really fast. They, after they did diagnose it, they went ahead, got me right in for surgery. So they did make like a little like incision here and take out like the whole like mass. After that, I went back in for surgery to get a port put in. So I had 4 rounds of chemo and 10 rounds of radiation.
Oh.
Honestly, it was really okay. I didn't have the next day after the chemo, I felt kind of like crummy. But I always got it done on a Friday. So that way I had the weekend to kind of like cover.
You think because you are in such good shape that it really helps you through
I
it?
hope so. Yeah. I mean, I like to think so. It's one of those things where, you don't have to get ready if you stay ready kind of thing.
Yeah.
And so, yeah, I'd like to think so that, a little bit of healthy living helps out. And
I mean, I'll say, dude, knowing you through all that, man, like, dude,
Yeah.
like you wouldn't even have known.
No.
Like you were so positive.
You are.
You know what I mean?
Always Mr. Smiley.
Were you positive like prior to all that, or was it that made you positive? You know what I mean? Like
no, I think that my aunt actually has one of her favorite sayings is worry is interest paid on bills not yet due.
Oh yeah, the
And I love
anxiety of
that.
the future.
Yeah.
And I've always kind of like lived by that. And shout out to Aunt Joyce. And so it was. I've always kind of thought about that, like don't worry until you really have to like worry about it.
Exactly.
And, I'm extremely lucky. Like I have amazing people in my life. I mean, like you guys are fantastic. Like, I'm blessed to call you guys my friends.
Yeah.
All my friends at my gym, they made this awesome shirt, by the way. They made me a chemo shirt. So what they did was they all signed it and then they all, like someone at the gym put it on and then they all painted the inside of their arms and hugged
Oh yeah.
the shirt. So it was like this overlapping like hug. So if you
Yeah.
look at the back of the shirt, it's a bunch of overlapping
Hands
and arms like hugging it. And I would wear that like during chemo.
That's so cute.
And so, and then Frankie and his sister Michelle, they threw me a 5K run. Jen Clemens hosted it at Coastal Life,
Nice.
So yeah, I mean, I didn't
You
even
and the
have
community.
I didn't even have time to like it's hard, someone asked me that too. And I was like, you'd almost have to be like ungrateful or flat out stupid to kind of feel sad when you have that many resources around you. Like at any given time, I could have picked the phone up,
Sure.
called anyone, said, I'm just having a day. Like this all just hit me like a ton of bricks. And any single person would have like, driven over, talked me off the ledge, anything
course.
like that in a second. So it's almost like literally like disrespectful not to use those people in your life that are like sitting there lifting you up. And I had so many people like that I really never had a chance to like get down.
Yeah, that's a great way to look at it.
That is a great way to look at it. I like that a lot. Yeah. Very nice.
Yeah, man. No, thanks for sharing, dude.
Yeah.
And congrats on beating it, by the way.
Thank
man.
you. Thank you. Yeah. So I just have my my 1 year. So all is good. So
Awesome,
hopefully
man.
that's all like in the rear view now. There's no like family history or anything. So it's kind of like weird.
Are you the
kinda
only
like
child?
random. I am. Yeah.
Yeah. Okay.
Yeah.
Nice.
That's what's wrong with you.
That is that's exactly what's
The only
wrong.
thing that's wrong with him.
That is not the only thing that's wrong with it. You can just add that to the list.
That's so funny.
Now, I would think like going through something like that, man, like just the way that you've been able to stay positive through it. It's like I feel like when that diagnosis comes down, you can either go the wrong way with it, get super depressed, and almost, I think that your body knows that, you know what I mean? And
Yeah.
reacts a certain way.
Yeah.
But like your ability to stay positive and go, we got this, no big deal. You know what I mean? It was like,
So I kind of went the other way and kind of like got like weird with it. I was like, if I'm going to the gym once a day, I'm going to go twice now.
yeah.
I was like, I'm just gonna like totally like
Let's beat the shit out of
let's
this
beat
thing.
the shit out of it. Yeah, and my buddy who I train with, he was like, man, he's like that cancer. He's like, I almost feel bad for the cancer. He's like,
Right.
the cancer just pops up, thinking it's gonna like, it found like a host to party in.
Wrong
And he's
person.
like,
Wrong guy.
he's like between
Yeah.
the weights and the whiskey. He's like,
whiskey.
man, he's like, this thing's like, it's probably like got to be like Mars inside of there, just like uninhabitable, And so he made that joke, and that was really funny. And yeah, it was interesting. It really, really was. It was an interesting road, and looking back on it, it kind of feels surreal, at times.
Yeah.
But yeah,
Cool, man. Awesome. Well, we couldn't be happier for you.
thank you.
Yeah.
Thank you. I appreciate
So-
that.
Do you want
That's
to wrap
awesome.
up with some lightning round questions?
Yeah, let's do it. Man, we've already been at it for 50 minutes. I didn't
Have
know
we?
that. Yeah.
Oh, I love that.
How about
I love
that?
that.
So we do a little lightning round, some
Well, before
closing
we get into
questions.
that, man, is there anything you want to
Yeah.
add or anything you want to make sure people know about Jason and AutoPay Plus or anything at all, man?
No, we covered a lot.
Yeah.
We really, really did. I mean, the one thing I will say is that, like I said, in addition to, having like great people like in my life, like we joked about the only child thing. My parents have always been just absolutely incredible. Like, my love of food comes from my mom. My love of fitness comes from my mom. My mom used to be a ski instructor
Yeah.
up north. She would work
Wow.
7 p to 7 a at the hospital, get off in the morning, and then go teach at the slope. So I think that's kind of where I get like my Energizer Bunny
Shout out
thing
to
from.
Joanne.
Joanne, yeah, Joanne. And then, my dad's the same way. My dad, I think he's the one who gave me that kind of like do anything, like fear no failure attitude. Like growing up, Dad and I used to restore cars and stuff like that in the garage. That was always a big hobby of his.
Yeah.
And, he always would just tackle things that seemed obscure. Like I never knew how he got this like massive skill set. And really his only trick was that he just didn't care if he failed at it.
Yeah.
He didn't care if he
Yeah.
messed it up because he would just redo it.
Honestly,
So basically,
it's the number one way to learn is
Yeah.
to fail, man.
yeah, it really is. So it was either you do it once and you get it right the first time,
Yeah.
or you just end up doing it a second time.
Yeah.
And I mean, really, what's the big deal
Okay.
in having
Yeah.
to do it a second time? So my parents have always been huge like supporters of me.
Shout out to the peeps.
Yeah, man.
That's wonderful.
Awesome. So born in Pennsylvania,
Born in Pennsylvania, Western PA, Johnstown.
Steelers or Eagles, I guess we know now.
Steelers, man. Steelers. We're on the correct side of the state.
Yeah, there you go. Favorite way to spend a weekend on the Space Coast?
Either on the motorcycle or on the boat,
Okay, cool.
for sure.
You have a boat?
Huh? Yeah.
Oh, you have a boat?
Yeah. So I love going out to the sandbar. Just anything with
I'm not a fan of the motorcycle, but I'm a fan of the boat.
yeah, anything that like brings like, friends together and gets us outdoors, things like that. So yeah.
Yeah.
Favorite restaurant?
Favorite restaurant, Yellow Dog Cafe.
Oh, I love that place.
Great place.
Yeah.
I never get down there, man, but what a fantastic
It's
place.
so good.
I was a dishwasher there when I was 15.
Oh, cool.
Yeah, my dad, jerk, used to drop me off to wash dishes and then would go fishing at Sebastian Inlet. Yeah, and then come pick me up later. So he'd go fishing all day, have a time of his life. Meanwhile, I'm like covered in like, ugh. So
So your motto is discipline equals freedom.
yeah.
How does that show up in your daily life?
People ask you that a lot, and you kind of did too. Like, how do you stay motivated? And you don't. You never stay motivated. Like motivation's a joke.
Yeah. You're
Motivation's a feeling. It's like being
Right.
like happy.
Right.
You have to be
Thank you. Gosh, I always see that. Like, we'll be like, are you happy? I'm like, not right now.
right. But it's about like being disciplined, right? Like being disciplined is like doing the things that you don't want to do and doing them anyways.
Yes.
And that goes with a lot of things. That goes, you run a business, there's plenty of days where you have to show up where, you may have your own things going on at home, your personal things, whatever that may be, other life events. And, you have to be disciplined enough to be able to compartmentalize those things and like stick to the plan and stay on track.
Yeah.
Not to literally plug AutoPay Plus back into this, but that is what we do. We help people stay on track, on discipline with their finance, even when life happens and like life hits, but that really is I think that is the key to success, is just staying disciplined. Like if you're waiting to like feel motivated or feel up to it, it's never going to happen. Yeah. That's not the way that success happens. You have to just stay the course.
Now I'm going to go work out tonight.
But I think it's with anything, I think it's with like, with your faith. I think if you want to have like a relationship with God or anything like that, you have to make it a priority, and you have to be, very, very, intentional with it, where you have to make time for those things. You have to make time for friends, for family. The only thing that you have to intentionally make time for those things in your life. Otherwise, they'll never turn into anything. If you want better relationships, put it on the calendar, put date nights on the calendar, put, time with like the guys on the calendar, put fitness on the calendar. You have to, those kind of things. And then you just start seeing the dividends that come from that. Like it's not tomorrow, it's not like, you do 3 crunches and you have a 6-pack, but it's eventually you're just like, man, like I'm, this is different. Like I'm walking a different path.
Yeah. That's a challenge for a lot of people. Everybody wants instant gratification from everything they do.
What's that?
Instant gratification. Everybody wants that from
We
everything
live in that world
do,
though, right? I mean, like everything is instant right now. And I think that, everything is instant, but there are just some things that inherently can never be instant. You have to like literally course correct and stick to it. Otherwise, so.
Lovely message. I love that.
Best piece of advice your parents ever gave you?
You just said it.
I know.
Can it be a grandparent?
Yeah.
All right. So I had to unfortunately read my grandfather's eulogy, right? So my cousin wrote this. My cousin is much, much smarter than me. And so he wrote my grandfather's eulogy. My grandfather was in World War II. He was a tail gunner. And he was part of the Jolly Rogers 92nd Bomb Group. And he was very, very proud of his military service. And my cousin, who again is much smarter than me, but also he's way more emotional than I am, couldn't read his own eulogy that he wrote. Aww. So I got handed the eulogy to read it. And one of our favorite quotes, all of us, all the grandkids, was, and after World War II, he became an open road truck driver. And so one of his favorite quotes was, "Put your mind in gear before you let the clutch out." So just his own way of saying, think before you speak.
Yeah. I love it.
Yeah.
That's a great way to end it, my friend.
Yeah.
Hey, man.
Oh my God, I love this.
We really, really appreciate you being here, spending some time with us.
Thank you, guys.
You're an awesome human being.
Yes.
Love you, brother.
Yes, thank you so much for coming.
Let's wrap it up. Let's get out of here.
Awesome, man. Thanks, guys.
That's a wrap for this episode of the Studio 321 podcast, powered by Brightway, the Steve Trout Agency. We can't thank you enough for being part of our journey. If you enjoyed this episode, be sure to subscribe, leave us a review, and share it with a friend. Until next time, 3, 2, 1, we're out.